All right, let's shut this music down. Let's get this going. How's everybody doing on this fantastic Thursday morning? Yeah, we got a lot of stuff going on. I wasn't even paying attention to the daggone GDP print. I knew it was happening today. I was just so busy trying to put together stuff for this live stream. I totally missed it. And initial jobless claims ticked up just a little bit, but down from last month. So for people that are expecting a recession, they need this number to climb. This comes out every week, so it's not that really big of a deal. This is a really big deal. So we have a positive GDP for Q2. Fantastic. Q1. Positive GDP. So that's pretty good stuff. The dollar's going higher on that positive GDP print. So if you want to short Bitcoin, you got daily resistance right here. All right. Now, one thing that you need to know about Bitcoin is yesterday you took out this week's low. Not last week's low. Last week's low was way down there. This week's low was this candle right there. Bounced from daily support. Yesterday you took that out and you have gotten a bounce all the way back up to daily support. Now, since you made a lower low, I could make the case for taking a short right here, throwing your stop above the high of day, especially since we got that good GDP print. That's going to be good for the dollar. And if you look at the weekly time frame, this just isn't a nice. I would like to see a nice pullback, at least down to some kind of resistance, right? This barely even moved lower. You've been trading in a range. There's your range, making lower highs and lower lows. Since you put in this breakout candle, that's your high, lower high, lower high. Today, lower high. On the 4-hour time frame, you can see right now that Bitcoin is dropping below that daily resistance. If you want to short it, high of day, stop, loss. Take profits, weekly open. That will still give you close to a 2-to-1 risk to reward. Here we'll go real quick, because we got other stuff to talk about. All right, and then pull this up. That's 1.5 to 1.5. So it's up to you if you want to take it or not. And remember, just because the dollar's up right now, it was down. It was down on the day, right there. So this thing opened at 7:30, 7 o'clock, just playing around, and 8:30 happens, and booyah! Go to the 5-minute time frame. Where's this candle? 8:30. So this was down on the day and was trending lower. So that was helping Bitcoin, obviously, with the move to the upside. But a GDP come out. So there you go. Potential quarterly resistance right there. But we definitely want the quarter to close, which is going to be tomorrow, under this yellow line. All right, that's what we want to see for bullishness to continue on Bitcoin. You got to have a weak dollar for Bitcoin to raise. Now, you can have a strong dollar and Bitcoin can still go up. We know that, but you are trading against the dollar, and it definitely helps Bitcoin clear resistance levels when the dollar is weak, for sure. All right, so here, I'll go back to Bitcoin real quick. Let's pull up the intraday time frame, and I'll show you what's transpired. So you traded up to daily resistance, broke above. This is your weekly open, broke above it on a nice strong push. Here's to the hourly. Same thing. Traded up. You can see it starting to slow down as it gets to that weekly open. That is your resistance. And then, bow, right? Right through it goes. And then you have a strong move up, liquidating today's high. You are also liquidating yesterday's high. All right? So I can make a case both for the bearish side of this and the bullish side. However, I can't buy it up here. Now, if I want to get long, I'll watch it at the weekly open. But as long as it's pushing above resistance, I can't buy it. I do not buy breakouts, and I suggest whoever follows me and listens to me that you do not either. Occasionally they will work, but more than often you will lose money if you try to buy breakouts or sell breakdowns. It's best to sell when the asset is at the highs, or if it's taken out a previous high, something like that. It's best to take a sell. Since the trend have lower highs, lower lows, okay? Since this breakout day, this is resistance, you broke out above it. Since that day, you have been trading in this day's range. So all of these days are inside of this day's range. This day tested support, bounced. This day tested support and bounced harder. So here you are. That would be my bull case. My bull case for it would simply be you took out the weekly low and you got a very strong bounce from that. Hence, meaning they were a lot of buyers setting right under the weekly low. So that's why you got such a bullish reaction. Now, the same goes for the short side. Once again, you're making lower highs and lower lows. This would be considered a bull flag, but trend lines are so very, very subjective. If I use this trend line, you're still inside of it, right? But if I use this high, you're currently trying to break out of it. And the same goes for the downside, right? You want to use this candle, then you got real close to breaking down to the bull flag, but now you're back trying to break above the bull flag. So that would be the bullish scenario. But I don't believe in, pattern trading. I trade candles inside the ranges. That's where the trades are. So subjection in your trend lines, right? So the short scenario would be if the dollar continues strong today, you're up almost 0.4%. It looks like Bitcoin is stronger because Bitcoin is moving up with the dollar today. This is your daily candle on the dollar. Like I said, this thing was moving down. It had taken out this high and then was bearish. But since the GDP came out, you're getting a bullish pop. Could this be a selling opportunity on the dollar? Absolutely. So I'll leave it with you. Bitcoin is up 2% on the day. And you took out yesterday's high and you're trading at daily resistance. All right. Bullish scenario. Bitcoin needs to stay above the weekly open. It needs to close above the weekly open. It needs to close bullish for you to have upside continuation. So for the near term, it's difficult because you're still trading pretty much at the high of day, right? Like if you take the short here, like it doesn't have to go very high to take out the high again. I mean, every swing high you've taken out and you've made higher highs for today. So we'll see what happens, but this is the price at which you want to short. That would be your stop loss. That's the only way you can do it. And you take profits right there. If you're bullish, you want to see price dip down to here and then hold, and then start to climb later on through the day. All right. That's the trade for today on Bitcoin. So let's move on. All right. The title of this video, are we going to be in a recession? All right. There's a lot of people out there that suggest that we are. One guy that I very, very much respect is TXMC or Alpha Beta Soup. And for the past 4 videos, he hadn't made a video in a long time, several months. And then he came out with a video on the bearish side. He has a very bearish bias right now based on data points. All right. And data points are helpful, but if you already have a bias, how does it help you to basically, if you have a bias, then that means you can construe the data to fit your bias. Because I got another person that I know who is a macro investor. He is a money manager. He has his own firm. He handles over $1 billion in assets, and he used the exact same data that TXMC did, only with other data, and he isn't making a prediction of if price is going to continue up or not. However, what he does say is that the way price action is right now, it looks good for the future. All right. With that being said, it doesn't predict anything. Past performance is not indicative of future results. But we are going to go through a few things real quick on the macro scale to kind of help you guys out, because this is what this channel is about. It's about helping you learn to manage your own money. Am I legally allowed to do that? The answer is no. So this is entertainment, if you will. But at the same time, I'm going to give you a few things that can really help in your decision-making process. First and foremost, if you believe that the S&P 500 is in a bear market bounce, then you are calling that essentially. Let's go straight to the S&P 500. Let's not use the futures because the futures is, yeah, let's just go straight to the asset itself. And let's go to monthly time frames, because monthly time frames are very important. All right, so first and foremost, we did have a bear market. We did drop below 20%, and we did make a fresh low, all right? And then a new year started. New year, new trend. That's the way it always works. And I'm going to show you in this video how you can approach this scenario moving forward. Actual useful information. Because if I pull up all of his data that suggests we're going to be in a recession sometime in the near future, but when, I can't tell you. And I can't even tell you if you're going to be in a recession. So literally all the work that you've done to make an opinion or a bias of there is going to be a recession based on this data, when, I don't know, could be a year from now, 2 years, 3 years, 4 years. So how does that help you as an investor move forward? If you're afraid because a recession's coming and you don't want to get into the marketplace, you're just going to sit in cash. Your other best, second best option would be to buy the 3-month T-bills, right? At what, 4%? That's 4 or 5% annually. Is that enough money for you to live on? 5% for an entire year? No, it's not. Of course it's not, right? Unless you're a billionaire, and in that case, you don't need to invest, all right? I'm talking about people who are trying to make money for their future so they can retire. But he makes a very bold claim here, and I love him. I respect him to death, but sometimes he gets a little bit, he gets a lot of it into his work.
At least half a year to go before we find ourselves in the historical sweet spot. Now, that doesn't mean we have to follow.
All right, so basically what he's saying is we got at least another half a year before, so Q4, Q1 next year, before you're in the sweet spot of when the recession should come. He is basing his main bias on one thing, and that is this: the 3-month, 10-year inversion. And as you can see, this is all the data that I can pull up, but he's got data from 73 to 75. And this is the actual, like, the Fed data. So I don't know why I can't go farther back than 1982. But basically what he's saying is when you invert on the 3-month, 10-year, there's almost a 100% hit rate. Well, there is a 100% hit rate from this data. And you can see on this chart that we have inverted more than we've ever inverted before. So that is basically what he is basing his case on. And then he goes out and he uses a lot of other data points to basically, I mean, it's the same data that most everybody, it's the NBER data. That's basically what he's using. And I'm going to show you this without manipulating the charts, because you know, he kind of has manipulated them just a little bit, but he does show that, or he does say that these things, if you look at them in the way that, you know, the Fred puts it, these things usually just trend up. So his goes straight, right? And then it shows dips and dips, and that's when the recessions are. But these are the strongest data points that would suggest a recession is coming, with 3 other ones that kind of soften before anything else: real manufacturing, industrial production, stuff like that. And the fact that jobs are maintaining strong, it usually does until the recession is here, or, you know, right before the recession gets here. But if you look at all these charts, I mean, these light gray areas, those are your recessions, right? They didn't include a recession here. Well, they did. It's just so small you can't see it. But yeah, but my thing is, what is that? I don't want to do that. What am I doing here? Get off there. Get. Hello. Thank you. Anyways, they're all basically trending up with, you know, this is kind of dipping here. It has been stagnant, sideways, if you will, bouncing up and down. This too, coming out of the recession, industrial production rises. It's basically roughly right around its high. It did have a dip, but as you can see, this is of, shit, I can't remember. Anyways, you can see that it's almost at the high. This thing, it's almost at the high. Look how this rolls over as the recession comes in. Now, I'm not saying that this isn't going to predict that later on that these things roll over. All I'm trying to say is, how does it help you? Right? How does it help you make investment decisions if you're just bearish? It doesn't. It doesn't help anybody. So let me go right back here because this is, this is important.
Longer afterwards. And again, we are over here on this timeline. We're all the way over here. We've got at least half a year to go before we find ourselves in the historical sweet spot. Now, that doesn't mean we have to follow these trends, but what it does
mean that we have to follow these trends, but
mean is that anyone who
what it does mean
thinks that just because we haven't had a downturn yet that we have avoided it, those people are just wrong. They just
boom. Those people are just wrong. Like I said, I love this guy. I'm not disrespecting him at all. He's a fantastic watch. He is really good at gathering data and doing amazing stuff with that data. All right. But like I said, it's split out there across the markets, right? It is split as it can be. You've got 50-year investors that are claiming that there ain't going to be a recession, and you've got other 50-year investors that are claiming that there will be a recession. So how can I help you, right? All right, so let's just do this. Let's just use the most simple, easiest things in the entire world to look at, and that is your exponential moving averages. And if you look at them on a weekly basis, going all the way back to I don't care when, all right? I don't care when. All of these, this is a big recession that happened back in the 70s. You can see here that once you started trending, once your moving averages got splayed out in the right correlated areas, right? Like your 21s above your 50, 50s above the 100, 100 above the 200, you did not make a new low. Ever in any bear market. Ever. Okay? Ever. We'll go look, right? Here's another bear market. Trades down, boom. Once you get above, everything gets worked out. Prices stay bullish. And they stay bullish and they stay bullish. And it's pretty much all the way to 2001 before you have a next really big downturn, really huge bear market. Remember, this is a weekly time frame. Moves to the downside. So in all of this, like, you're definitely a seller, right? You're buying puts on swing highs. You're not looking to buy into the market. You get above the 21 here, and then boom, prices continue. And once everything gets turned right side up, did you make a fresh new low? No, you didn't. Now, this is the great financial crisis. It's not the same recession, okay? This recession was a bubble that burst. This recession was a credit crisis. It is the GFC, the great financial crisis, all right? Yeah, it's like the second biggest since the 40s, all right? The 40s was bigger. But anyways, my thesis remains the same just by looking at the moving averages and watching them, right? Boom, down she goes. Once the moving averages right here get situated the right way, you do have dips, obviously, but do you make a fresh bear market low once that happens? The answer to that question is no, right? No. This one was so fast in March 2020 that it didn't even, the only thing that happened was the 20 got below the 50 and then boom, right back to bull market territory. And here we are, ladies and gentlemen. Here we are. So if price rolls over, it will be the first time in history that you make a fresh low after your weekly exponential moving averages get situated. That's one simple data point. One simple data point that also, like he claims the 3-month 10-year has almost or does have a 100% hit rate of calling a recession. This, as I just showed you, has a 100% hit rate of showing you that a cyclical trend continued afterwards. All right. What is important here is what makes asset prices go up. It is investors. That's what it is. It's not the economy. It's not retail sales. It's not jobless claims. It's none of that stuff. What makes asset prices go up is buying demand. All right. If there was still no demand in this asset, it would not be raising. And there's nothing that says that it can't go up, make a new all-time high, and then bleh, puke, right? I'm not saying that. I'm just simply saying that this was the low, and you could have simply started being a buyer once you got back above the exponential 200 moving average. And if you've done that, even in the face of, this is just a bear market bounce, Bitcoin's going to 10K, all that nonsense, you would have made money while they're still sitting on the sidelines, or B, still shorting all the swing highs, which also, means you're going to lose money. All right. The second way that I want you to move forward, all right? The second way that I want you to move forward, if we have a bear market, we will do it in the two biggest ones that we know of, right? Or the two latest biggest ones. Watch the yearly opens, all right? You started to collapse in October, then boom, right here is your yearly open, right? Right there. You traded above it, watch the monthly instead. Especially the monthly will help you so much more, right? Here we go. October, December, January. So this candle right here, right there's your open, okay? So look what happens the next month. Boom. That should warn you, or at least scare you, right? Well, I don't know if I want to be a buyer yet because it's a new year and we're trading under the yearly opening range. Watch what happens right here in May of 2001. It retests what? The yearly opening range, and what? Rolls over. Yeah. So let's go find the next year. 02, December, January 02. Here we are. So new year, new trend. There you are. Boom. Instantly, you're closing monthlies under the yearly opening range. March comes back in for a retest. Doesn't quite liquidate January's high, but closes under it. That's not good. What you want to see is it close above it. Next candle, puke, right? So you don't want to be a buyer of this asset, at least until you get back above that, or you can use your 200 exponential moving average. Moving on. Next year, October, November, January, boom. There's your open right there. January 2003. Asset prices going down for the first quarter. Yucky. But boom. There it is. Right there. Right? Strong close. Could have been a buyer right there. Remember, this is investing. This isn't trading. Investing. So you can get inside of this asset. But other stocks perform better. Like I went back and looked at all the bear markets and looked at Apple. And I can tell you this, that in every single bear market that the S&P 500 had, all the big ones, since Apple started trading publicly, once Apple made an all-time high, once it made a fresh all-time high, then the S&P 500 did not make a fresh low in the same bear market period, right? In the same recession. This is many years apart. But anyways, once you got above that with a nice big strong monthly close, if you close the monthly back under it or up, you know what I'm saying? You're buying within a $100 radius right here. Not that bad. No, absolutely zero leverage. You're investing. You're looking at long-term growth. Buy it there, boom. And then all of a sudden, the great financial crisis happens in the same scenario. October, November, December. Right there. January. New year, new trend. Keep that in your mind forever, for the rest of your life. Okay? It's the best info that you're ever going to learn on the internet, whether you believe me or not. Yearly open, straight down, straight down. I don't want to be a buyer. So as of right now, I'm going to take my profits and set in cash. But by this time, you would have already heard the news, right? Let's go look at the 10-year, 2-year. Let's go to '08 here. So basically, the actual recession started in December of '07. So by January of '08, you already knew, based on the news, based on MBER, that you were in a recession. Typically don't want to be a buyer in a recession. However, you would be watching your technicals, because not only do you want to be back in there buying, you might want to buy some puts, right? Take those profits that you made from this many years of straight trending up, take some of those profits and invest in some puts, all right? Until you get to where you are obviously trending back up, right? '08, December, February, January. So January '08, you get 2 more months of downside. And then right here is where you want to be a buyer. And on this year, you got an opportunity to do so as you got multiple monthly tests. But you're still kind of like in the I don't want to buy zone, because this could act as resistance, which it could. It could. When does this recession end? July '09 is the official end. So right there on this month, that's the official end of the recession. And then what happens to asset prices from there? Well, we all know, don't we? Right? Because here we are. Now, minus this, because this happened in January, this would have been one time. Well, no, this would have kept you in check too, because January, the freaking monthly candle closed under the yearly opening range. So even though you're trading above it, probably closing weeks above it, it's the monthly that counts. If you're looking at yearly trends, secular trends, all right? This is information that boggles me to the fact that nobody else is teaching people. And they all claim to be traders and investors, but they can't even simply help people find a trend. New year, new trend, people, always. Here was 2022. We're still in a massive, massive inversion here. All right. So I'm not saying a recession isn't coming. I'm teaching you how to make money. All right. Before, during, and after a recession. New year, new trend. January, right there. It opens in sayonara, which we already know that because we've been looking, right? 2 quarters of straight upside and 2 quarters of positive GDP. And once again, that chart I showed you of all the metrics that he's looking at to basically say that 3 of them are softening. And those 3 usually soften before the other 2 or 3. And then once they go, the whole thing goes. But asset prices are important because asset prices is what makes you money. If you're an investor, the rise and downfall of asset prices is absolutely going to destroy your P&L or help your P&L. So when he makes comments or other people make comments of, I don't care what asset prices are doing, well, what are you then? Are you just a predictor of bad things? Are you even an investor? Right? Obviously, you're probably going to have a bad year this year because even if we are going to see a recession, it's probably months to years away. But this is what we know. Also, like I said earlier, Apple, once it made a fresh all-time high, the S&P 500 never made a new low. There's Apple, fresh all-time highs. And it's not just Apple, it's Microsoft, it's Nvidia. You got a lot of things that are up massively on the year. And they're still calling this a bear market bounce. So while they're, sitting on their hands, not doing anything for 2023, we're making money. So if you're new, please hit that subscribe button because you're not going to learn the stuff that I'm teaching you anywhere else. Nobody else. I basically called the bear market. I'm not going to do this because everybody else is doing it. I had another guy up there saying the same thing. I'm the only one that called the bear market when Bitcoin was that. No, dude, no, you weren't. All right. No, you weren't. And I wasn't the only one either. There were a lot of people, I'm sure. But we literally, and if you don't believe me, if you're new, you can literally ask anybody that's in here. This channel has called every major market move. Not just the downturn, also the upturn. And in the medium turn turns, right? Every single macro turn we have made, called, and hit. So as of right now, markets are trending up. If you are invested at the yearly open, then just wait, right? Wait. If you see a big monthly engulfing occur or something like that, then take your profits and wait. Or just leave it, see what happens. Those are going to be your decisions. But as of right now, this asset is super freaking bullish. You barely got under the 21 on a monthly basis. Like, there's your weekly. You're moving up. You're moving up. Look at just straight up weeks. Boom, 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 boom. Bitcoin short working out. And it went where? Right where I said it would go. Boom. Let's get rid of these. So now, if you're bullish, this is the area for you to watch. That was also the area I told you to take profits. Before the move happened, I might add. Before the move happened. Boom. There you go. So if you're long, we don't want to see Bitcoin, or if you want to be long, we don't want to see Bitcoin closing hourlies or multiple hourlies under this weekly open, because today's Thursday. And if you look at your weekly range, you're barely up, all right? You're barely up. Look at that. What a fantastic. You can't even see it. Boom, boom. Beautiful stuff, I'm telling you. So yeah, you don't want to see it trading below there, because what that means is you got, 3 days, well, Thursday, Friday, Saturday, Sunday, 3 days before you close the week. And you don't want to see it. Well, we kind of do want to see it close bearish, right? I would love to see it close bearish, and maybe next week, but I don't want to see a big bearish candle. I want to see a test of an old resistance level, like roughly in here first, right? I'm not going to buy there immediately. I'm going to give it a few days, or here, right? Somewhere down in here. Anything under that, then puke, right? Puke. We don't want to see it puke. We just want to see a slow pullback. It could last for a few days and then, or a few weeks, and then bam, to the upside. Now, bullish factors for Bitcoin. I'm sure you've all heard. BlackRock, Citadel, Deutsche Bank, Fidelity, Charles Schwab, Credit Agricole, Bank o' Santander, all filing for ETFs. ARK-K filed for an ETF, according to some other people, before BlackRock did. Massive, massive firms looking to get involved in Bitcoin, even though the SEC is literally trying to destroy crypto. Now, it may still destroy crypto, but I do believe this is very good news for Bitcoin, especially for Bitcoin hodlers. Eventually, this will cause demand. If these people get access or a yes on a spot ETF, I heard that we should know by the end of August if BlackRock's ETF goes through or not. That literally means that they got to buy the underlying asset. Do you understand that? They are going to buy Bitcoins. They have to, because they have to hold as much Bitcoin as everybody that partakes on the ETF is buying. Then Coinbase is supposed to be the company that is going to self-custody those Bitcoins for BlackRock. Now, that's the way it was. We don't know if that's going to be the way it is in the future, but that is the main plan. It is good news for Bitcoin. And you are up nicely on the year. So had you bought Bitcoin, say, January the 1st, you would be up nicely, right? 79%, that's, or 78%. Well, round up, right? 79%. That is of today. So yeah, good stuff. So looks like the short is still holding, but like I said, that's going to be an area of potential support. So if you did take the short, hopefully you did take some profits. Remember, you leave a little piece on for any potential continuation. Because if it does break down and it is going to be a bearish week, then you will be situated pretty good, right? You'll be situated pretty good. You won't be situated at the high of the week, but just below the high of the week. So if the week goes down, then yeah, you'll be good. And that small position you leave on could end up making more than the initial trade itself. So we'll see what happens. All right. Any questions? Big fat rant there for you. All over Thursday morning. One trade, hit, boom, done. Let's see what XTSC's doing, because we're still watching this damn thing. Where's the early open at? Why is the early open not marked? Right there. So we bounced off of it. We bounced off of it. So yeah, it may roll over here. That was the opportunity for the short, for sure. We've been discussing this asset, although it is nice and bullish, coming off these lows down here on a yearly trending. You're just pulling back, right? Because you've spent most of your time bearish. So I got long down here just based off of daily support. It was just a day trade. I took profits. I bought this with a little over 2.5 lots. So obviously I took profits during that day, and boom, up she goes. But now I'm probably going to close it out and wait for an entry. Actually right here could potentially be one, just depending on how today closes. Just depending on how today closes. Because you did go out and take out yesterday's low, and it looks like you are aiming for the high. But these are multiple daily lows right through here. So price does not need to get much further than above that high to roll over. So this might actually be a trade coming up pretty damn soon here on CAD Swiss. So that you got to get above that to take out yesterday's high. But this is yesterday's open, so this area could actually act as a potential sell area. On Forex.com, it's 3.6 pips. So be careful. Excuse me, be careful. If you put a limit order like at the high, make sure you get whatever you're trading on. Make sure those pips are good. Or just wait for it to get up there and then drop and just mark it in. I mean, it's not that big of a deal. Good morning, EuroCAD gave me another entry this morning, short from yearly open. EuroCAD, let's go take a look at it. Oh, wait, also, I forgot all about this. This is what I set up. So, the green line is the S&P 500. That is over here. The bars is your Fed's fund rate. If you're not familiar with what a Fed fund rate is, it is interest rates. I went ahead and done the liberty of pulling it up for you. The federal funds rate describes the interest rate that banks charge other banks for lending them, blah, blah, blah. All right, good with that. So this is your interest rates. The red line is inflation. So and these are the recessions. Like I said, I don't have data past 1982, so I can't get any recessions from there. However, I can simply look at asset prices and inflation and the Fed funds rate and pretty much get a good idea of when a recession happened, right? Inflation moving up, and then interest rates start moving up to curb inflation, asset prices drop. Same scenario, asset prices continue to move up, make a fresh yearly high, 1967 all the way to 72. So many years in there, right? Inflation skyrockets, asset prices drop, interest rates exceed to the upside. My question was, can asset prices move higher during higher inflation and higher interest rates? And that is here. So there's your low, right? Inflation starts to go lower, asset prices. This is inflation. I will just watch the cursor. I'm at the very low of the bear market, August 74. Inflation 2 months later starts to drop. And inflation is almost like at 12.3%. High inflation starts to drop. Asset prices start to rise. Yes, they are also dropping interest rates at the same time. Asset prices stall out here, start to go lower. They are actually raising interest rates because inflation stopped, moved up, sideways, and then up. But right here, still, you did not make a fresh bear market low. And while inflation is trending higher, while interest rates are trending higher, asset prices are trending higher. All right? So asset prices can trend higher in a higher interest rate, higher inflationary environment. All right? So we move forward. You'll see you come into the recession right here. They drop interest rates. Your inflation is at 9%, which is exactly, well, we got to 9.1%, right? And then as soon as inflation starts to turn around, watch asset prices. This is the inflation. I mean, not the inflation, the recession. From the date that the recession started to the date that the recession ended. So basically, asset prices start moving forward and up during inflation, during a recession. Inflation starts to roll over, asset prices move higher during a recession. Interest rates are dropping. Interest rates are climbing, asset prices squiggle a little bit, and then at the highs of interest rates, asset prices take off. Boom. Remember, asset prices is how you make money. You do not make money from the Fed funds rate. You do not make money from the inflation rate. You make money, whether you are long or short, asset prices. So asset prices, regardless of what all of your data junkies out there claim, are very important. It's the way you make or lose money. So inflation, pretty good, right? Roughly in what? The low here, 1.4, the high, 3.6. So you're in a good inflationary environment. Interest rates pretty much stuck at 5. Well, they're at 5 here. They're down to 5.27 there, and they're back up to 5.51 there. So interest rates are exactly at the same height, literally, as we are now. But, well, actually, you could also say the inflation number that we got is lower too. So, boom. But then, obviously, those great financial crisis happens, and then inflation stays pretty sturdy down there at 0, and you just go up. So my whole point is, asset prices start to sell off before inflation hits a high because the market usually prices in stuff like that. How do they know? Well, because this month to this month is higher, then this month is higher, then this month is higher. Notice how you got like 3 or 4 months of rising inflation monthly prints before the asset prices start to sell off, right? The market usually is in the lead before bad things happen. And then you put in a low. When did you put in a low? There. So this move higher, this move lower, literally just liquidated that swing low and that swing low. So it got 2 swing lows, but inflation starts to trend down. As interest rates move higher, asset prices are moving higher. That's not to say that it's going to continue to blast off, but we've seen in the past where inflation was under 5% and interest rates were at 5%, asset prices just soared. All right? So there, I'm done with inflation or recession talks. If a recession comes, guess what? We're going to nail it. If a recession doesn't come, guess what? We're going to nail it. It doesn't matter what happens in the future because we do good over here. So Bitcoin's monthly looks great. There's nothing else that can be said about that. And also a reason why I don't like to buy up here is because literally you're above that swing high. So you have done a liquidation. If price wants to go lower, it can. It doesn't mean it has to. So if you want to be a buyer, just watch the weekly open because you think the weekly is going to close up. If you think the weekly is going to close lower, well, then you could potentially get another short opportunity here at daily res 3707. That is the price of which that you can short. Stop must be above the daily high. But like I said, anybody that wanted to buy the weekly open. That happened so damn fast. It happened within 5 minutes. Boom. So even then, like, that's not a, it's not a huge move up, but it is what it is. So we'll see who ends up winning, but it was easy as that. Let's go look here. Let me read the comments real quick as we are getting. Oh, I never went and looked at EuroCAD. Shit. Here, let's go look at EuroCAD. I'm assuming you're on Oanda. Boom, baby. If you are new, yellow lines indicate yearly opening ranges on my charts. Fantastic trade. Fantastic trade. Mini pips. 79 pips to the downside. Fantastic. Yeah. Good stuff, broski. Now, if it pops back above, you could potentially look at it long. Because this is your yearly low right there. It's so close. I don't know if you made a fresh yearly low there or not. 42384. 423. 428. So this is the lower. This is your yearly low. So if you make a fresh yearly low, then your trend is going to be down. As you made a fresh yearly high, the trend was up. But Canadian dollar just all of a sudden came out with some strength, right? Also, the down day on the euro, you can see where that short trade happened. You see my white line? You see that? Would anybody care to guess as to what that is? That is an objective price. It is weekly res. Look at today, trades up right there. Puke. And it happened at 8:30. That was the news. The GDP. That was just dollar strength that caused that. But still an opportunity nonetheless. Objective. And we're trading at the weekly open right now. So tomorrow will be the close on this. These are the important levels. That trade already happened. Euro USD. Nice trade on the Euro CAD, my man. Good stuff. All right. Good morning, Heath. If you have time, can you look at Riot and Mara? Yeah, Riot and Mara are fantastic things to use to trade against Bitcoin, because I'm pretty sure you can find shares to short on those. So for day trades, you can absolutely short these things. There it is. So there's your 1 hour, making fresh daily high and then dropping a little bit. I mean, it's going to look similar to Bitcoin, but at the same time making lower highs. This could be another lower high, right? It's trading well above its resistance. It literally looks like a breakout. But it's going to trade similar to Bitcoin. Excuse me, I had to get a drink of water. So yeah, whatever Bitcoin does, this thing will do. Now, I'm not expecting Bitcoin to go, back to its yearly open. We do have 2 more quarters for this year. I mean, if you would have bought Riot at the yearly opening range, you would be up 243%. That is just freaking insane. And then here's Mara. Mara looks better than Bitcoin does. Mara actually made a higher high, so there's that. But these things are mining companies, so I'd say hash rates and other Bitcoin fundamentals make these things trade similar and different at the same time. And then with Mara from the yearly opening range, had you just bought it right then and there, you would be up 290%. And, we did buy on the yearly open. I told people back when all of your favorite stocks were down here on the lows, I told people these are the areas that you want to be a buyer, because you may not get another chance like this for 10 years. We don't know if a recession is coming or not. It's impossible to predict. We have one thing that suggests that we are going to see it, right? But who's to say that this is the one and only time that it doesn't call a recession? Just like who's to say this would be the one and only time that Apple made a fresh all-time high and the S&P rolls over. You see what I'm saying? A lot of things have changed since COVID. A lot of dynamics that people used to look at, their 60-40 portfolios and everything that they used to be able to do, everything changed when the Fed literally just printed money. It changed everything. So older ways of investing in stuff may not be feasible in the future, especially now that AI is around. You can get info quicker today than you could in the past, and yada yada, right? So what do we do, right? How do we have an edge over them? We watch price. It's as simple as that, because price is the most important thing. Once again, I've said it like 5 times in this video, but are bears wrong this year, or are bulls? Clearly, bears are wrong. Clearly, they are wrong. You are making fresh all-time highs on Apple. My biggest fundamental thing that I was looking for at the market turn was inflation. I wanted to see the inflation rate start to roll over, and I literally said, word for word, if inflation starts to roll over, people will start to buy back into assets. And that's also the one thing that most people leave out of their bear case, is the inflation rate. Now, the Fed spoke yesterday, and he is saying that there's going to be at least 2 more hikes, and they don't see inflation hitting 2% until 2025. That's what the Fed thinks, right? And the Fed could be right. Were they right when they said that we weren't going to see inflation? No, they weren't. We seen it. It came. Or it was going to be transitory. They're not right on their calls either. It's impossible to make these calls. So, but one thing that I definitely know for a fact is we know how to trade this stuff. If it does roll over, if the assets start to, become in a bear market, we're going to know. We're going to know because we're going to see those numbers start to deteriorate. And all you got to do is look up MBER and it'll give you the exact thing that you need to know to see if a recession is on its way. However, I wouldn't start shorting stuff just because you know an inflation is coming, because you never will know when it comes, right? Asset prices will tell you before NBER will tell you. That's a promise. Price will tell you before anybody else can that there is going to be a recession. Also, something that was odd, we saw Aussie dollar come up and get above that yearly opening range, but it only closed a weekly above it. Next week, puke. Right? It puked. This is based on them pausing. They paused when they were expected to hike 25 basis points. They paused. And that's why. I really believe if they would have hiked, then you would still probably be seeing this above the yearly opening range. However, it's got to get all the way above this big candles high right there before you can say Aussie dollar is in an uptrend. And Aussie dollar is a risk on asset. So if it is bearish, it is cause for concern. All right? It is cause for concern because the DXY has a huge portion of Aussie in it. So if Aussie's weak and New Zealand's weak, yen's weak, that's going to give dollar strength. The only reason that the dollar ain't moving straight up right now is because of euro dollar and pound dollar. That's literally the only reason. Because they're both slightly sideways to up, whereas pound dollar on the year is up. All right. So, yeah. But we do expect the pound to eventually roll over because that's what it has done its entire life. It goes up for a little while and then rolls over. Put it back on log. You can see that right there. We're coming back into that trend line. So rest assured, if pound is a short, we will know soon enough. All right. All right. Heath is the bomb on fire. Thank you, Ted. I appreciate you, my friend. MX said the same thing. Thank you, Heath. You're my hero. I've never been called a hero before, but I appreciate that. Good morning. Good morning. Can we look at gold? Absolutely. This is another asset that is tied, unfortunately, to the dollar. So, dollar prices will affect gold prices. On the year, you're up. You didn't quite make a fresh all-time high, though. You got really close. But you are pulling back on the second quarter. This could be good. If the dollar eventually rolls over, gold could break out here. And gold has been trading in a... Sorry, this was another one of my talks about how bullish it could be for a spot ETF. But anyways, that's over and done with. But this is literally your range from there to there. You did kind of break out of it, but you're struggling to get any kind of momentum. So that's kind of what you need to see is bullish momentum for gold to break out and continue. Like it literally threw a bull trap up there. So for the time being, I would probably be... Well, I mean, if you could find a good area of support, you could try it. Obviously, it's worth the risk. especially if you're only risking 1%, you're at daily support right here. So as long as you can't close daily candles under this area, could be an opportunity to be a buyer. I mean, if you go from this swing low to that swing high, you're going to be at like the 238 retracement. But what I would do is I would go from the yearly low to the yearly high and up, obviously, because the trend is up. So you're right roughly around the area where gold is going to continue to be bullish. You would want to see it happen there. If we throw our moving averages on, you're also testing the 200 on the daily. Let's see where we are on the 200 weekly. You're well above the 200 weekly, so that's good. Yeah, I mean, yeah, that's what I would do, my man. I would just watch that. If you get a daily close below it, wait for the next day because it could be a trap. But we see traps happen on the weeklies too. But there's literally no level there for the weekly to hold. It's being held by that. So if you can't close under 1903,865 on a daily closing basis, then not today, but maybe tomorrow on a retest you could buy using that swing low as your stop loss, or give it a few days. The market's going to close tomorrow, so yeah. I would say let's see what the dollar does today. Because if it closes above, it's already dropping like a brick. It was up 0.5%. Oh, that's an area that could potentially be support as its last week's high. Damn it, I wanted the dollar to close below here. It didn't happen. We'll see. We'll see how it ends up playing out. That GDP number got it. And initial jobless claims was bullish also. See, a lower than expected reading should be taken as bullish. It was expected at 266. It was lower. So you had two bullish dollar newsprints today. That's why the dollar's up. That's also why I said I could see the short on Bitcoin. This morning, I told everybody in the Discord that I could make a bull case and a bear case for Bitcoin today. The only reason I could make a bull case was because of the bounce that happened here, right? You bounce from making a fresh weekly low all the way back up to daily support or daily resistance. But when the weekly low was put in, you actually got a higher bounce. You see that? This was a fresh weekly low also. That was your weekly low. Then that made a fresh weekly low and you got a bounce. You made a fresh weekly low and got a lower bounce. So that's the bearish case. The bullish case was simple. You liquidated this range and immediately went back up to daily resistance. So if you close above daily resistance today, then you're going to have your breakout. If you close above this price today, 307.07, you will have a bullish breakout. And it will be breaking out above the, whatever you want to call it, bear flag or descending trend line. If you use that one, it's going to be an easy one breakout. But if you use this one, it's like not. They're just subjective, right? It's just subjective. I would have used that one because that was the next swing high. And you got a bearish reaction from there. So it makes sense to use that one. Traded back up into it, well above it, but closed under it. And then the next day, boom, down. So although the retrace on this was heavy or big, it still could be considered bearish. But at the same time, So it's not easy to set a trade up when I can make both a bull case and a bear case. But I pretty much told you what to watch before the move happened. If you wanted to short it, where to short it. For people that, let me say this. If you're making highs on Bitcoin, like fresh daily highs, around 7 o'clock in the morning, you got to be very careful about taking shorts there. And the reason is because we see this a lot where the New York stock market opens and you make a run above that high and then you fall. So anybody that did take the short there and was using the daily high as a stop loss, they got stopped out right there. And that sucks because eventually they ended up being right. And literally, if you're short here and that's your stop loss, this high, that's literally like a what, 5-1, 6-1 risk to reward down to the weekly open. Well, 4-1, 3.8-1. So that's a much better risk to reward. The problem is sometimes you do get that run above the high when the New York stock market opens. And it did here. But at 8:30, we already knew that the dollar had 2 bullish prints. So the short was good. It was a good short, right? Using that high of day. But it still don't mean that you won't get stopped out today. If the dollar continues to crumble and this area holds its support, Bitcoin could continue higher today. I don't know what price is ever going to do. My job is to teach you the areas to watch, to look for entries. Not always will those entries be right. You might be early or late, but eventually, once you learn how to manage your risk, your equity curve is going to go up. It is. I guarantee it. It's as simple as that. But yeah, gold will probably do whatever the dollar does, but keep an eye on that daily support. This is as financial advice. Take this as financial advice and you will end up with all your belongings by shopping, trolley, living in a bus. Stop your bus, stop. Yeah. I don't think I ever said that. I think Brandon used to say something like that. If you take this as financial advice, you'll end up living in a bus by the river or some shit. Amazing TA, bro. I don't know anyone who does it like this on candles only, and you are nailing it. We nail it often. Our hit rate is good. The less trades you take, ultimately, the more you're gonna be successful. It's just the way it is. If you've got 2 successful trades on the week and you're up like 10-15%, you know there's no reason to take any more risk. I want you guys to do one thing. I want you to be patient because listen to me. I know you're anxious to take a trade because you're anxious to make money. But I promise you, once you get to the point to where I am, you would much rather not take a trade all week so that way you can close the week out neutral instead of closing the week out red. That is financial advice. So if you're up good on the week on 1 trade or 2, you're done. You could be done for the week because the objective is to do that week in and week out. If you can make 5% per week, I promise you, if you can do that consistently, there's 52 weeks in a year. If you can close up, like the majority of them, if you can do that for 2 years, I don't care if you're trading with $100. If you can show that you can consistently be up and you manage risk good, people will give you money to trade. They will give you money. You could walk into any freaking, any place and be like, this is what I've been doing. And the guy will look at it and he'll be like, when can you start? You know what I mean? When can you start? You won't have to pay a prop firm. The prop firm will pay you. They'll give you 50% of what you make. And they will take 50%, but they won't ask for no money up front. That's not the way prop firms work. If you're not profitable, then obviously you got to pay a prop firm. But if you can stack up 2 years, and in an entire lifetime, what is 2 years? It's nothing. It's a blink of an eye. 2 years of consistent profitable results that prove that you can manage risk and make consistent gains. You will be able to trade it at any prop firm in the world. Because 71% of all traders in the world cannot do that. And I'm talking 1 to 2% per week. If you can do 1 to 2% consistently every single week, you will be able to get money to trade. I promise you, people will knock down your door. I have right now in my Twitter feed, on my instant messages, multiple people just begging me to take their money and trade it. I don't want the risk of losing their money. I'm fine with my money. I don't want that added stress. I'm already good. Right? I live within my means, so I don't need to be a billionaire. I don't need people to give me money to trade. But if you do, then just do what I say. And in time, you will get there. Inside of the Trade Talk Discord, I got 4 people that have told me that they are funded by a prop firm. They didn't make enough money to do it, to trade for a living. They didn't have enough money, you know what I mean? They didn't want to lose all their savings, so they got funded. Now they're trading other people's money. That's a good way to trade. If I didn't have money, I would trade prop, right? For sure. I would take everybody's money. But I'm okay, so I don't need to take other people's money. Just learn how to be consistent. Managing your risk, consistent. Entries and exits, consistent. Everything must be consistent. And then some days you're going to get lucky and you're going to nail a USD JPY trade that lasts for months. You know what I mean? Unfortunately, that USD JPY trade isn't looking so good anymore. This isn't even the right one. There it is. When it was down here, it was like 12 grand. Now it's at 4. But once again, that's only 1/3 of the position size. I made a lot more of that because my stop loss was so freaking small. And this was a 500 pip day. I think I had like a 10, 15 pip stop. So I was levered up. Levered up. But the Japanese yen is literally, I mean, it takes 151 yen to equal $1. I think they're the worst in the world. Everybody's making fun of the Turkish lira, and the yen is way worse. Way worse. As of right now, Bitcoin versus the yen is $4 million. Look at this shit. 4,403,801 yen. $4 million. That would be like $4 million. But it's not. It's the yen, so. Yeah. The yen is bad. It is very bad. And the BOJ was supposed to intervene and they didn't. Well, they did up here. That's why I shorted it. And I was expecting the dollar to roll over, but I expected the BOJ to strengthen up their currency, and they failed to do so. He was live yesterday, and he said he ain't gonna do shit about it still. So that's why you're seeing it continue higher today. The BOJ isn't doing shit to help their currency, but they're not high in inflation either. And here, see, there's Japanese yen's inflation rate. What that was back when that was back at our high. I don't have any. I need like info today. Why does that just go to, oh, right there. I gotta be careful on what I click on here. Where's 2023, dude? Yeah, I don't like this. I don't like it. Anyways, their money sucks. So they need to fix that. And if they do fix it or intervene again, then this short might end up working out. This is Barclays' target. 123, or was. They might have updated that target, seeing how the BOJ didn't do nothing. We all figured they would, since the Nikkei is up so good this year. But I mean, if you don't have high inflation, there's no point in tightening your monetary policy either, right? Right. What was I about to look for? I don't know. All right, let me answer some questions and wrap it up. Yeah, it could definitely go higher, Terror Rooster. I'm not saying that it won't. I am not saying that Bitcoin can't go higher. What the hell happened to my chart? Why does it look so different to me all of a sudden? Where are my tabs? That's what it is. It got bigger. And also, when did they take away? Can you even see this down here? No, you can't. When did they take away scale? Or not scale, but anyways, it don't matter. Yeah, it could definitely slingshot up there. We have a bullish price target on Bitcoin up to 35K. A, that would fill the gap on the CME chart, and B, it would test a monthly support that was never retested. So that's two reasons technically why I say Bitcoin could hit 35K. But still, we have to follow price, especially if you're a day trader. You got to follow it day by day. If you're not, if you're a monthly trader or a quarterly trader, then you just need to look at the monthly and quarterly charts. You don't have to look at anything else. I mean, if you're bullish Bitcoin, you could have took a long right there at 25,302 on a monthly basis. Just get long. Right? Doesn't mean that you're going to make money in the future, but it's a good technical area to do so. As you're looking to buy like the low end of the month. And if you're looking to sell, you're looking to sell the high end of the month. You don't want to be a buyer at the highs, and you don't want to be a seller at the lows. You gotta change the way you do things. On my Bitget chart, I'm showing a trend line. I can't remember which one I used. That one. Yeah. The reason I used this one is because it held at support there. It would literally be cheating for me to move it down, right? You would think, right? If you're like a trend line trader, then you must respect your trend line. You can't just move it because, oh, well, this must be the low or this must be the low. Like, you can't do that. touch, touch. So you did trade under it for a little while there, but you broke out. So that was another bullish case. So it needs to hold here, literally. And it's good correlation with the weekly open as well. So just watch the weekly open. If you close multiple candles, like say a 4 hour even, just one of them, it could be bad. Like if this 4 hour candle, which closes in an hour, closes down here, that's not going to look good. It's going to look like this was nothing more than a trap. Just like this was a trap. So watch that price, 30480, the weekly open. Well said. He says, Beardy, thank you, my friend. And can someone tell me in short what is up with SoFi and why am I seeing so many YouTubers talking about this? It's up on the year. Let's see how much it's up. It's not up that big on the year. It's up 96%. Maybe they're invested in cryptos. Is your YouTuber stock traders or are they crypto traders or like me, everything? Forex, stocks, crypto? It's up. I wouldn't be a buyer of it right now. Maybe in 831, but that's still going to put you buying at the highs because 450 was the buy. Yeah, you already tested 2-week resistance and you're moving higher pretty much. But you're still trading in last 2-week sessions candle. And there's 1 day on the close. So this is technically an inside candle. Even if it does close above, it's good, but there's a resistance right there. It needs to close higher and it needs to make a higher high than the last 2-week session. And in 1 day and 6 hours, it's not likely to happen. Well, I guess it could happen. It's right there. It's very gappy and stuff. They make money. Here's your earnings down here. So they've hit more earnings than they've lost. So are they profitable? Let's find out. Oh shit, I don't even have to do that. I can just do this. This is new on TradingView. I didn't even know this existed till the other day when I was messing around with it. They're not dividend. Performance weekly, monthly, 3 months, 6 month, year to date, 1 year. Yeah, so you can see it's got good performance. It's a buy. I wouldn't buy it because it's at the freaking highs, but analyst rating is a buy. Where's their money? Revenue. They don't make money, according to FinViz. They're negative 284 million in income. And they've sold 1 billion in sales. So they need to get that number profitable right there. But if it's a good company, people will invest in it. It's up on the year, so it's, as far as I'm concerned, it's bullish. But I would wait for support before I'd look to buy it. It tested this, so it's already made its move. If it continues higher, wait for another pullback. And I don't mean one day. I mean like that, like a week or two, right? Let it pull back to a relevant price. See, people will argue that the reason it went up from here was the 21 exponential, which I can say, yeah, probably. There's bots that are set to buy on a 21 exponential test, but I would say it was based on this support right there. That bearish candle. So, yeah. And then what? Yeah, listen, just because a company isn't profitable does not mean that their asset prices won't go up. The last time we looked at NEO, it wasn't up. So it had to go up in the last few weeks. No, it's still down. It's not up. It went up maybe 37% from the lows, but it's still bearish on the year. Yeah. This could just be a retest, brother, to the yearly open. I mean, there's a trend, but you might have broke out of the trend. People will invest in companies that lose money if they have a good business plan. Let's say that. And if they are making money, like more than they're losing. So if their income continues to get bigger in the negative, people will sell. But if their income is getting better towards the positive, they will buy because it means they're, on the way to profitability. And a company needs to be in the way to profitability. And then for this, raging bull market it had when Tesla was, breaking out and making all-time highs, this was just speculation. Because if you just look at their earnings, they miss more than they hit. So they miss more than they hit. 1, 2, 3, 4, 5, 6, 7, 8, 9 versus 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So one more. So like a 50% hit rate on earnings. You can buy it. I don't have no problem with you buying it at all. If it's just an investment and you're not putting any leverage on it. When you put leverage on something, then you must have a stop loss. If you're just investing in it, then you don't have to have a stop loss. It's up to you how much you want to lose, but you know how to do this, Johan, right? Wait for it to pull back to support if you want to buy it. One could argue that it has broken out. So watch 854. If that 854 holds as support, then you can buy it. 843. Yeah, roughly in there. If it pulls back to there, buy it. If it breaks out, it'll go roughly. I mean, it's not a guarantee that it'll go up a measured move, but it would be something like this, all right? And then you would be looking for a correction like back down to 12 or 11. It's up to you whether you want to buy it or not. But, I'm pretty sure that it won't change on this because it's in the billions that they're down. Yeah. Yeah, it is moving up. Wasn't it 2.8443 billion? Wasn't it 2.8 billion? See, now it's 2.4 billion. So they're moving in the right direction. That's why their stock prices is going up. NEO is a huge car company in Asia. It's like one of the biggest EV companies, if not the biggest. So eventually it'll probably be profitable. I don't know Autodesk's ticker. ADSK. It's up on the year. Right there. So that's their yearly opening range. So, yeah. But you had a pullback just now. Oof. It is bullish. It made a fresh yearly high. So I would watch $200, 201 in this area, right in there. Yeah. I would watch this price right there, 202. If you get a pullback to there, you could potentially be a buyer. It doesn't mean that it'll work, but that's the first area that I would be looking for entries if I was wanting to buy this. I mean, this is a wedge, but oh no, it didn't make a fresh yearly high. This is your yearly high right there. So you're in a wedge. You might want to wait for the breakout or the breakdown. Why is that yellow? Let's make it pink. I don't know. Maybe look at the closes. Yeah, maybe wait for it to break out and then look for support. Because as of right now, you're kind of buying it at resistance. So this would be the... Yeah, from 200 to 199 or 202 to 199, I could buy it. But it is definitely wedging up. And there's an old theory that whichever way it was going before it got in a range, that's typically the way you look for it to go out of the range. I mean, the stock looks good. Yeah, the stock looks good, dude. They only make money. It's from the left corner to the top right. Anytime you see that on an asset on a long-term time frame, it is a good investment. And you pulled back 51%, so it is kind of still on sale. But it is struggling. I'll say that much. It's struggling. So if you want to be safe, you can wait for the breakout. That typically don't really mean anything. So, yeah, 199 to 201. 199 is the monthly open. You are welcome, Brooke. Yeah, I don't know anything about it either, Bruce. I'll do some research, see if I can find out why. I haven't looked at Twitter today because I was getting today's live stream together. I was looking for so much data, I didn't even have time to build a freaking thumbnail. Oh, I am so not good at this YouTube thing. Not good at it at all. But I was trying to make everybody understand, you know, knowing or thinking that an inflation is coming has nothing to do with you making money or losing money in the financial markets. Asset prices are everything. When people say asset prices are nothing, they literally do not know what the frick they're talking about. Because asset prices determine whether you're profitable or not. not jobs numbers, right? There's not a job, like you can't trade you can trade non-farm payrolls, but you're going to have to trade it via a financial asset. You can't just trade the unemployment rate. You can't. You can't buy or sell this. So it really doesn't matter, does it? What this is doing? No. Price is everything. It's everything. And with that, we'll kill it. Thank you guys so much for being here. We held more people today than we did for a while, so that's good. But anyways, make sure you guys subscribe if you haven't yet. Like the video, all that good stuff for me. I appreciate it as always. And we'll see you again next week, as tomorrow will be the end of the week. Well, not for Bitcoin, but asset prices. We'll see how everything closes out this week, and that'll give us, some more info to go on with next week. So make sure you guys, until then, make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.